All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. Today is Monday, and I want to welcome you all. I'm sorry I'm running a little bit behind, but as you know, technology holds me back. Let's get this thing going, shall we? All right. So real quick, hold on a second. Let me just change something over here so I can see my trading view people. Okay, I am simulcasting on both platforms. So real quick, let me explain to you how this works. Okay, hold on. All right, so I'm going to explain to you how this works for those of you that may be new to the stream. So first thing I'm going to do is I'm going to go over the economic calendar. Okay, let me just put this over here. All right. So we have an idea of what to expect this week, all right, in terms of economic events that are on the schedule, because it's important to mitigate risk that way. Okay, so we're going to go over that. Then I'm going to go over the Bitcoin chart, right? That's where we're going to talk about the support and resistance levels and the forecast, basically things that you need to know as the week unfolds so that you can better prepare, all right? And again, manage risk. And then third, I'm going to answer your questions about stocks or altcoins. So if you have a stock or an altcoin that you'd like me to analyze, please put the symbol in the channel now, okay? If it's an altcoin, please make sure to put USD or USDT after the symbol so that, okay, hold on. All right, this thing is giving me a hard time. All right, if you're watching me on TradingView and you can't see me, make sure that you refresh the browser, and that usually solves the problem, okay? Because people always chime in there like, oh, I can't see him, but I can hear him. Okay, refresh the browser. Also, if you'd like to share what city or what country you are from, that's always a fun fact. I'm streaming from New Jersey, northern New Jersey, or also known as the greater New York City area, okay? So again, thank you all for joining me today. And it's getting nice and warm here now. All right, so first things first, let's get this thing started, shall we? All right, enough talk. So here we go. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, and let me just say hello to all my people real quick, all my regulars, right? We got Stian, hey, good to see you. All right, Glenn, Alex, nice job, Alex, good to hear. All right, from Romania, he's my only Romanian left. I used to have like the whole country in here practically. He's the only guy that still follows me from Romania. Sam, good to see you. All right, hey, Dom, how are you? Rui from Portugal, obrigado. Raman, good to see you. Mr. Plow, Amen. All right. Paul, cool. Good to see everyone. Good to see everyone. All right, cool, cool. All right. Yeah, this is a tough crowd. What are you talking about? All right. So, all right, here we go. Hey, HS, long time no see. How are you? All right. So first things first. So let me make a quick announcement before I get into the platform, into the news. Okay, I'm not news. Economic calendar. Can't even think straight anymore. So there's a new link in my signature. Okay, on the TradingView side here, and that link actually I've linked it to a profile page that you can actually see my actual performance for the trades that I take personally. Okay, so I'm pointing this out because the trades that I take personally they're not always exactly the same as the trade scanner trades. First of all, on the platform that I'm using for this strategy that you can actually see unfold in real time I can't trade stocks on that platform. Okay, so there are not going to be any stock trades, but I can trade things like the S&P, NASDAQ, Bitcoin, things like that. That is what you will see. Okay, so you can actually see performance statistics for the type of trades that I take. Now, another thing I have to mention is these are not day trades. Okay, these are swing trades, and that's what the strategy that I'm employing, that is being tracked, that is what I'm employing there. Okay, so if you have any questions about that, you can always reach out to me and ask me things about that. But that's what's going on there. So you can actually see my swing trade performance and how I manage inventory. Okay, I don't think it'll actually show you the actual trades, but it's showing you the results of the trades. Okay, I think you actually have to be logged in or whatever to see the actual whatever. Okay, so with that being said, also, if you'd like to know more about my trade scanner and stuff like that, please reach out to me. Best way to contact me is by email. Okay, there's been problems with the server because there's an impersonator that likes to show up in there, and he likes to try to steal money from people. So I pretty much have that under control. But best thing to do if you're looking to reach out to me, send me an email. Okay, mark@markpmarkets. That's the best way to reach me, and I can answer questions that way. At least you know you're really talking to me. Okay, anyway, so with that, let's get into the economic calendar. All right, so who has been paying attention to the economic calendar? Today, I'm going to ask you, instead of me just, have to spoon feed all the time, right? You guys should be paying attention to the economic calendar. So let me see, you guys who anticipate, I see a bunch of guys here. Stian, of course, he knows. A few other people, they anticipate my stream. Good job, you guys. So Stian says CPI or PPI. Okay, but when, Stian? You have to be more specific. When is the CPI? When is the PPI? What time? Can you tell me? That's a pretty important report, by the way. And what other reports do we have this week? Can anyone tell me? You guys should be on top of this. Okay, it's important for you, not for me. Okay, I know what to do. You guys need to know this stuff. So, and I want you to get in the habit of checking an economic calendar. You can use the one from TradingView. You can use any economic calendar. It doesn't matter which one you use. You're just paying attention to certain economic events. For example, the week before, we had FOMC and we had non-farm payrolls. Those are probably the two most important events each month, okay? Followed by CCI, sorry, not CCI, CPI, and things like, PPI and things like that. So let me see what you guys are saying here. Okay, so Armand says on May 11th, okay, inflation rate, May 10th. But what is that? Okay, CPI, 510. Okay, cool. There you go. So CPI next to non-farm payrolls and next to any FOMC activity, the CPI is probably the next most important number because that is a gauge of inflation. And as you know, in this country, we have inflationary problems. So that can move markets, okay? And that can move the dollar and that can move the bond market. So you need to know that that's coming out, especially if you're involved in intraday trades, because it can move things out of nowhere, okay? That number usually comes out, I think, at 8:30 a.m. Eastern time. I believe that's when that number comes out, okay? So Amatov, okay, CPI on Wednesday, cool. All right, Drac, good to see you. Okay, so hey, from the Netherlands, welcome. So any other numbers, any other things that we should be aware of this week? So we got CPI, anything else? Jobless claims, okay, that's not a big deal. See, and this is why I want you guys to bring up the events to me, because you may think they're important, and I can tell you it's not that important, okay? Jobless claims is not that big of a deal. It's non-farm payrolls, that's the big deal, all right? And we've had that. That's only once a month. That was the previous Friday, so that's out of the way, all right? So in the markets, I don't actually look at the report itself. I look at the price action, particularly at the close of the day. That's all I'm interested in. How have the markets interpreted that information, and how have the markets closed? That's all I'm interested in, okay? It's a very simple piece of information. I don't go crazy. I don't have to read 10,000 reports. I don't have to watch 10 fake gurus explain to me what the FOMC said or whatever. I don't need to know any of that. Price tells me what the market thinks, and that's all I'm interested in, because the market knows everything, okay? So that's a very important concept. You have to accept that the market knows everything and that you know nothing. That is the way I go into the market each day. I know nothing, okay? I may have some ideas here and there, but the market always knows everything, and the market is highly random. So you have to accept those concepts if you expect to get anywhere with your account, okay? Very important, because otherwise, this is what you'll do. You're going to think that you can actually forecast stuff, or you're going to believe people who tell you that they can actually forecast stuff when the reality is they only have a 50% probability of being right, which is random, okay? So anyway, so that's pretty much the economic calendar. There's not really a whole lot to say about it besides that. So, well, PPI. So Steen says PPI. Okay, so PPI, I'd say is like it's somewhat important, but not as right. So CPI is definitely more important, and then PPI. Okay, pay attention to it, but I wouldn't expect any dramatic moves from that. Right, the CPI can give you a much more dramatic move. Something like NFP, something like an FOMC meeting or a Chairman Powell testimony of some kind. Those can move markets in a big way. These other numbers, they get less and less important as you go. Okay. Okay, cool. All right, so let's move along here. Armin says interest rate decision for England. Dear. Well, here's the thing. If you're not in the pound, if you're not in a pound cross, it's not going to matter too much, right? The only interest rates that matter right now are U.S. interest rates because everyone else pretty much follows. I've seen all these other interest rate decisions across these other currencies, and the markets like barely move. It's like they're not even having those meetings. Okay, so I wouldn't worry too much unless, of course, you're in a pound cross. Then you should be more aware because it may affect your position. All right, does that make sense? Okay, cool. Hey, Gray, how are you? Please take a look at. Okay, cool. Gray, thanks for stopping by from Shanghai. All right, I know it's like 4 a.m. over there. I mean, the guy stays up all night just to hear me say hello. Okay, we got Denmark in the house. I'm just looking at some of these places over here. Okay, and I saw Portugal. Okay, cool. Norway. All right, so that's the economic calendar. Are we cool on that? Any questions before I make the chart bigger here and we get into charts? All right, so I don't see any other questions. Let's get into the charts, shall we? And by the way, if you like my stream, if you'd like to be helpful, please do me a favor and press the like button, press the boost button, press the subscribe button to my channel. I keep saying this, but I am going to do it. I am going to be coming out with other content, other useful content on my channel as well. It's not going to just only be these streams, okay? So do me a favor, press the like button, press the boost button. I appreciate that very much. Thank you. All right, so let's get into Bitcoin. And let me make my chart bigger, okay, so you guys can see what I'm talking about. All right, there we go. So here's the thing. And right now I have this the ATR on here. I don't need the ATR right now, so I'm going to remove it. Okay. I know people are like, "Oh, what is that?" I went over that a few weeks ago on my streams. You guys can go back and watch that. It was just to basically help you come up with order entry. It's an order entry solution. You can call it that. All right. So let's talk about Bitcoin because that's the title of today's stream, right? Key support levels and weekly forecast. That's what we're here to talk about. So as you can see here, I wrote my article on TradingView. Actually, I published it the other day, and we were fooling around inside of this area when I wrote the article. Now, as you can see, I have not continued drawing my little squiggly line, as someone recently made fun of me with. I'm drawing squiggly lines on my charts now. So there was no reason to continue that squiggly line because we were basically at this resistance area, right? I have this blue rectangle at the top of my chart here because that represents a high probability fake out zone, right? That's what I like to call that. It's basically an area where price can fake out if it tests. It sucks in all the people that believe fake gurus. All the gurus come out, Bitcoin breakout, blah, 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 and then it reverses, right? That's the high probability price area for such an event, which I would be anticipating if price was testing that. It doesn't mean that it will do it. It just means that there's a high probability that that outcome can unfold, okay? I look at this game in terms of probabilities and nothing else. So now we're pulling back. We're inside this consolidation. I talked about this in my article, okay? This is basically, you can draw like lines on this. You can draw like trend lines and stuff like this inside of this rectangle that I just drew over here. And you can call that a number of things. You can call it a wedge. You can call it, a triangle. There's all kinds of things you can call that. A pennant formation, whatever, because you would have a trend line with a negative slope over here, and then you'd have like sort of one, sort of flat kind of. You understand what I'm saying? I don't have to draw it here. Picture it with your imagination, right? So in that area, that's a consolidation. So don't get caught up with this. That's what everyone is going to do. Because everyone still wears their Captain Obvious hat and they grasp at the obvious. Do not do that. On top of that, when you tune in to like TikTok and all those other places, they're all going to tell you Bitcoin's a short. This is not a short yet, okay? Yes, the market is pulling back, but on this time frame, this is turning into a buying opportunity and the kind that I'm interested in for swing trades. Okay, so let's talk about that. And let me move this box out of here. That rectangle that I just removed, that was a previous buy area, which I had called the trade. I called the trade on that privately for my followers about that area specifically, and that was worth something. Okay, twice actually. I talked about that a couple of weeks ago. So now pulling back to where we are now, what I'm interested in, and I wrote about this in my article, if you read my TradingView article, I'm interested in this area right here. Okay, so just like this rectangle up here, or that square, just like that, this is the inverse of it here. What I'm looking for in this area right here is the fake out, the bearish fake out. Okay, now why is that so compelling? Why am I so interested in that? Because the general structure, which is what people don't pay attention to here, this structure, you know, going back quite some time. I mean, we can go back here all the way to the beginning of the year. This is not a bearish structure yet. It's a bullish structure. Higher lows and higher highs. This is our highest high. Right now, this is a higher low consolidation. My students should know what I'm talking about there, okay? Higher low consolidation, which means support levels are going to carry more weight and they're going to be a higher probability. Now, you may say, you know, with the Captain Obvious hat, well, this is a support level right here. Well, that is a support level, but we are in a consolidation, okay? So the trend, you can say, is paused right now. And when we consolidate like this, support levels, the exact level, which everyone likes to see, is not going to be so clear, right? So what happens often is it will probe below the support level slightly. That's the fake out zone. And that's the area that I'm looking for. So if price can test this area, which the upper boundary is 26,478, so you figure 26,4, maybe even 26 even, that whole range between 26,000 and 27,5. Right now we're at 27,464, right? So basically this entire range, let me draw it from 26. What does this look like from 26? Here's 26,000 right here, okay? So this entire range is a high probability reversal zone for swing trade longs. And that is like the key point as far as key support levels and weekly forecast. As this week unfolds, I mean, the biggest report we have this week is that CPI number. Perhaps we see Bitcoin test inside of this support area, okay? Now, keep in mind, if it's testing inside the support area, it may look very ugly. It may be a large bearish candle. I mean, let me give you an idea of what that might look like, okay? That may look something like this initially, all right? It may be like a large red candle that looks like that, okay? That's going to get a lot of people excited. It's going to get a lot of fake gurus all excited because, you know, again, they have to react to what they see. Now, if I see this, what I'm looking for, first of all, is the daily close. So if this looks like that intraday, if we get a candle that looks like this intraday, I'm not going to react to that or be impressed by that or be moved by that, okay? What I'm interested in is how that candle closes. This could be tomorrow's candle. This could be Wednesday's candle, okay? But I'm interested in how that candle closes, right? Right now, this is our current candle you could see that I'm pointing to here, our current candle. If we close like that, okay, chances are we're going to probe lower if we close on the low like this, okay? So if we're testing inside this zone, right, the long rectangle here, right, if we test inside here, I'm going to be looking for how far it goes inside there and how that candle closes. So the ideal close in this situation, an ideal single candle close will look like this, right? It'll look like a pin bar. That's the ideal close. Let me draw that a little bit better so you guys can see. Can you guys see that? How that looks? Here, I'm going to put this over here like this. Watch this. There we go. So that would be the ideal close, something like that. Now, why in this situation would I not be looking for a complex reversal, as I've talked about back here, right? I was looking for a complex reversal back here. Here, I would be okay with a single reversal, a single candle, or a complex reversal. I would be okay with both. Why? You want to know why? Because we have all of this price action previous to it, right? We have all this previous to it. Back here, when we initially touched the area, we had no history. We had no price history there. You could say, and you'll say, no, but there's price history back here. That's not the kind of history I want to see when we have an initial pullback like this. When we see something like this initially, the first one, I want to see complexity, because this first one can take price back much lower, right? So I don't want to step in front of that. Now, instead, what we have is we have two attempts. We have this consolidation structure. So when I see a consolidation structure, that to me says we're not in a bearish trend, okay, not on this time frame. And this is where a simple reversal would be acceptable, because I have all this price history, right? This is what I'm talking about. Let me erase this here for a moment, and let me explain what I mean a little bit more about price history, because I know people are going to be confused by that. Price history, this is price history, this area right here, right? These candles right here and these candles. Why is that important? Because there are trades that take place inside of here, okay, and they're short. They short these thinking that it's a breakout of some kind. They overreact, they listen to some fraud, and they get short, okay? And then they get stuck in the position because they have to take some pain when the price goes up there. So if they're not margined out and they're still in the position, they're hoping that it comes back to break even, which is now coming back to break even for them. So what does that mean? That means they start buying to get out. That's the type of price action that I'm looking for, and that's the price history that I'm referring to, okay? There are people stuck in those positions. So if I get the reversal confirmation, I will be open for the long, and I will call that long, in the places where I normally call that long, okay? Now, keep in mind that type of swing trade is not the same strategy that I use for my inventory swing trades, which is what the tracker is tracking. All right, so just understand that they're not the same. These single swing trades that I call, they don't. Let me put it this way: the inventory swing trades do not they account for other factors that single swing trades like this one don't account for. So a single swing trade, meaning you get a signal like this, you get like a bullish reversal, like in that area, okay? And then, I call along at 26.5 with a stop at like 25 even, and take profit of 28, for example, right? That would be like a single swing trade. That's ideal for like a personal account. But when it comes to inventory, I have to consider other factors like people following like in an automatic way. So basically there's a larger position at stake, right? So that's why I can't trade the two the same way, just to be a little clearer. All right, so does this make sense so far? So again, the weekly forecast is this. We retrace, all right, and this is just an idea, a possibility, one of infinite possibilities. I'm not speaking here with any degree of certainty, right? I mean, if we can probe into the area, I think there's a decent probability, more than 50% chance, that we probe into this area. And if we do, then I would be looking for the reversal. If there's no reversal, then you have to step aside, okay? So no trade. But if the reversal appears, then there's a high probability, or greater than 50% probability, that we retest the upper part of the range, okay? If this support area holds, now everything that I just described, before I get into that next point, everything that I just described is for this week, possibly going into next week. So we test the range low and we bounce off the range low back into the higher point of the range with a potential breakout, because the general trend is bullish. Okay, so I'm not anticipating a break to 20K or anything like that. Although anything is possible, I believe that the probability is less. And I believe that the probability is more that we find a reversal in a fake out zone and we reverse and retest the 30K or 29K resistance. That's the forecast for this week. So if you're involved in Bitcoin, if you're looking for swing trades, that is the mindset that you should be employing. Does that make sense? Okay, so let me see if you guys have any questions. Hey, Malad, how are you? Good to see you. Fed's Waller speech on Thursday in Michigan consumer sentiment. Okay, so Michigan consumer sentiment is usually not a big mover, okay? And Fed Waller, he must be one of the Fed governors. No one cares about him, all right? I mean, unless he says something ridiculously surprising, if it's not Chairman Powell, no one pays attention. Like the markets don't care, all right, typically. So again, that's why it's good that you mentioned these items on the economic calendar, because now you get a better idea of what carries weight and what does not. Okay? Don't pay attention to the things that do not carry weight. One of the biggest problems that I see with beginner traders is they put too much weight on useless information and don't realize that most of the information that you consume is useless and carries no weight. And you don't know how to weight valuable information. All right. Meanwhile, valuable information is a very small amount. If you see the information that I'm using to evaluate trades, it's minimal, because less is more. Because in the retail space, 99% of what we consume is useless. So you have to get that through your head. I know everyone likes to believe more is better. This is the reason why I'm so unpopular, because fake gurus will tell you more is better. I'm going to give you more oscillators, more this, more complexity, because you think there's something to it. It's a complete farce. Less is more. The less information that you can make a judgment on, the better. I pay attention to absolutely no news. I pay attention to nothing but price and levels and structure. Nothing else. Okay? So because I know everything is baked into price, because I'm very familiar with the efficient markets hypothesis, which I keep telling everyone, you guys should know what that is. All right. So anyway, all right. So that's my analysis and my forecast for Bitcoin for the week. Let me know if you have any questions. So let's move on to the next section now. And this is where I'm going to now answer questions. Okay. Oh, by the way, and I just want to ask a quick question. Anyone take any trade scanner trades? I'm just curious. Okay, because now the trade scanner in this situation is not going to call Bitcoin long. Right? It shouldn't anyway. It's not going to call Bitcoin long because it's programmed to, there's filters. It's a screener. The trade scanner is a screener, and there's filters in there that I've programmed to avoid certain situations. So if the trend becomes unclear to the scanner, which is what it's going to tell you, the scanner can only see so much, right? It's not going to call trades in this situation. But I'm just curious if anyone's taking the stock trade scans, because I mean, the stock trade scanner produces like lists of like 15 stocks a day sometimes, lots of ideas in there. So just curious about that. Let me know, you guys, if anyone's been taking those. All right. So next to that, let's start getting into your questions. So I see some people put some questions earlier. So let's take a look at what people want to see. All right. So now Steen asks about the dollar index. So before I take a look at that, Steen, we should always take a look, and all of you guys should be in the habit of doing this, what I'm about to show you here. All of you guys should always look at the bond market every day, okay? Take a look at the 10-year note every day. Now, I know people are going to start signing off now because I usually do when I get into people's charts, but this is an important chart. You should all be familiar with this. This is the 10-year note, okay? Treasury note futures. Now, this chart is an important economic tool. As you can see, we've rejected this resistance on the bond market, okay, the 10-year note. And the bond market, though, has been inside of this consolidation. Now, this is a reflection of interest rates. What has Chairman Powell said over the previous Wednesday? They said that the central bank said that they're going to pause, right? Or that was the idea. Now, going to pause means what? No more raising rates, right? So if rates are coming off, we don't have any more rising rates. What does that mean for this chart, right? If rates are coming off, because again, the relationship is inverse, right? So if we have bonds going lower, rates are going higher, right? But if the bonds are rising, then rates should be going lower, right? So what's happening here? What's happening? This is strange. I mean, if we go back, right, we had the rising rates back here, and now it looks like the rates are back in rising mode. Now, keep in mind, when it comes to the bond market, it's not a one-to-one relationship. It's just a general idea, and it takes time for these effects to be felt. So this will not make sense in terms of logic. Chairman Powell said they're going to pause. So bonds, if that's the case, bond prices should be rising if they're not going to raise rates anymore at some point in the future, right? So instead, though, the bond market is showing us that rates are still working their way higher, or they're not coming off yet. So that's an important thing to keep in mind. The bond market is smarter than everyone else, okay? Banks and institutions and governments trade this market, not mindless retail traders. So whenever the bond market makes a strange move like this, you have to just keep that in mind. Now, another thing you have to realize about the bonds, see what I mean? I was able to forecast the number of people watching me go lower. I should have shorted that. All right. Anyway, when the bond market does something like this, what we have to realize is this rectangle that I just put on my chart, we're still inside that range. Okay. So for the stocks and everyone else that pretty much get affected by the bond market, the bonds are not doing anything new, meaning we haven't broken out, which means rates are not going lower, and we haven't broken lower either. We haven't broken here, right? We're not in that area, which means rates are rising in a dramatic way, right? So the fact that we keep overlapping means things are probably going to stay the same, okay? As long as we continue to overlap inside of this range. So guys, please make sure you understand that. Don't get too caught up in this if it's not doing anything new, right? No matter what the experts say, I don't care what they say on all these, he's been a 30-year bond, blah, blah, blah. It doesn't matter. All it matters is what the bonds actually do, okay? So, and real quick, before we look at the dollar, let's just take a quick look at the NASDAQ, right? Look at the NASDAQ. This is the NASDAQ 100 on its highs. We're at, what are we at? 13,283. Okay, this thing is on the verge of breaking out, right? While we have all this negative stuff going on, it's kind of senseless, right? But there is some logic to it if you look at, all these companies making job cuts and this and that, right? The market loves stuff like that. So don't sit there and argue with this chart, okay? The chart knows more than we do, right? The market knows more than we do. The thing is, what I would tell you about something like this is don't be buying stocks on highs like that. If you're going to day trade, then this could be useful for a day trade because you're only in it for the day. But that's the main resistance on the NASDAQ right there. And it's possible that we can get up there, okay? So just please keep that in mind when you're dealing with something like this. This general trend is bullish, even though there's so many bearish factors around us right now. The short-term trend is bullish. So Stian, with all that being said, let's take a look at the dollar index, because that's the other thing people should look at. Now, so Stian says the dollar is at support and he thinks it's going to break. Well, I have to agree. That's the support on the dollar. The dollar's tried to hold that support, okay? But we have this situation here in this country where, things are just like out of control in certain areas, especially when it comes to economic policy and things. And there's this little resistance here. I suspect we're going to break that support as well, okay? With the inflationary problems that we have, and now the Fed is stuck. They can't continue to raise rates because banks are failing, right? If inflation gets out of control and they have to resort to something like price controls, which is, I heard some talk about that, then I don't know, this thing has no choice but to go lower, right? So I'm bearish on the dollar in that sense, even though it's still maintaining this support, right? So how does that help me? Well, for one, I'm not going to be going crazy buying the dollar, right? I'm not going to be going crazy shorting the euro, which is like buying the dollar, right? I wouldn't do that, because if this thing breaks, then we have a leg lower, right? Which we have not seen in a very long time. A leg lower on the dollar can take us to, like, let's see, the next support on the dollar is 97.85. You can round that to 97.50, something like that. Right now, we're still fooling around at 101. So that would be a lot of money that would cause something like that. Okay, so please keep that in mind. I wouldn't be overly bullish on the dollar in this situation, which is a bullish sign for gold. It's a bullish sign for the euro, for the pound, everything that trades against the dollar, if that dollar breaks. And it looks like it's poised to break. Now, we could be wrong, and the dollar may prove us wrong, right? But in order for the dollar to prove us wrong, it's going to have to take out this resistance at 102.53, okay? As long as it cannot do that, I suspect we get the bearish breakout. Does that make sense, you guys? Does that make sense? Okay, let's move along here. Let me start answering some other people's questions. Okay, cool. Well, Alex, I'm glad. Look, don't worry about missing position. Don't worry about missing trades, especially counter trend trades, Alex. Like shorting Bitcoin is counter trend. It's great if you're in the trade for a day or a couple of days. Okay, fine. But here's where people make the mistakes with those counter trend trades. They take the short. It works for them a little bit, but then they get this opinion. Oh, Bitcoin's going to 20K because I think it's going there, right? And Bitcoin is not going to 20K. And then you get stuck in the position. So if you're going to take counter trend, expect less. That's the best thing I can tell you. Okay, there's nothing wrong with it. It's aggressive. Just expect less, and you'll get out of it'll put you in a better position to stay out of its way when it's going to make its next move higher. Okay, or getting caught on the wrong side. Let's just put it that way. Okay, I'm just scanning through here. Let me see what other questions I have. Let me check over here on TradingView. Okay. Slovenia. All right. Hey, how are you? Great to hear from you. All right, no problem. Great. I'm glad you enjoyed my article. Let me know if you guys have any questions over there on TradingView. I don't see any questions. All right, let's go back here to YouTube and let me see what you guys got. So I'm looking through here, and I think the next question is Cake. Hey, Kim, how are you? Good to see you. All right, so let's take a look at Cake. It's an altcoin, USDT. Thank you for letting me know that. Oh, look at that mess. Hold on, before I talk about this, let me just take a look at something here. Interesting. Stian, or one of my guys who have access to this, can you guys give me the price that the robot called this thing short? I mean, I don't think it called any longs recently. Can you guys tell me the price, the recent short on this, on Litecoin? Okay, so let's go back to Cake, because I remember seeing some Litecoin shorts on the trade scanner. And I don't trade Litecoin, so I don't trade everything that shows up on the trade scanner. Like I tell everyone, you have to use your judgment, right? So Litecoin is not a coin that I trade. But I saw a bunch of shorts go off on that, and I was like, I wonder if the trade scanner is, seeing the right things there. I'm wondering, because I wasn't looking at the chart. So that's why I checked the chart there. All right, so anyway, let me know, you guys, what price that thing was calling the short. And let me know if it was still calling the short. All right, or if it called another trade. If it calls it short, it should not be calling it long, because it's a trend following system. Okay, anyway, so Cake. Cake is a garbage coin, or there's another word I can call it, but I try to keep this G-rated, so I'm not going to call it that, but you know what I'm saying. So a situation like this, I hope you're not long, but this is not good. Okay, and this is why I warn people about buying and accumulating inventory on these things, because these have the potential to go to zero. Okay, so when you have a situation like this, the first thing you should do is take a look at the weekly chart. Okay, now maybe you're interested in shorting it, possibly. If that's the case, that's also a bad idea. And you say, why is that a bad idea? It's going lower. Because you're shorting the absolute potential bottom. Okay, I mean, look at this thing. Let's open this chart up a bit, man. So this is Cake, right? Going back, I mean, at one point, at ridiculous prices, this thing was at 44.27. It is now at $1.89. Okay, so a lot of fraud in there, a lot of fake gurus pointing their finger at someone else in there, telling people to get long. Anyway, so this thing is pushing new lows. It broke this support, which was a pretty significant support at $2.50. Okay, that's a very bearish sign. So what do you do though? So if you're long, I don't know what to tell you. You're screwed. If you're long from higher prices, it's either you bang it out and take whatever you can, take the loss. Okay, I don't know if you're long. I'm just saying, people that are long, that's one choice. Bang it out and take the loss. You can wait for a potential retrace back to resistance now, which is $2.50. So perhaps you get that retest of that price, which will allow you to exit for a smaller loss, possibly. Okay, again, I don't know your position. But as far as playing this thing as a swing trade, this is what I'd be looking for: a retest of 250, okay, or a possible retest of this zone, right? This entire zone. Here, let me draw a little square in there. Okay, this entire zone, a retest of this zone. And if you get that retest, you can then look for a short in there. If you're going to take a short on something like that, again, you should not have very high expectations. This is a $1 coin. I mean, so what, you're going to short it to zero? this is not a great choice. You don't want to short things that are so low like that, because something changes. Next thing you know, this thing could be back at $5, right? I mean, it can happen because these things behave that way. There's no rhyme or reason, or it could get hyped for whatever reason. So if you're looking for a short, that's the scenario I'd look for. But if you're thinking long because it's at amazing prices, no way, because this thing should not have broken those supports. This thing is not in a position for accumulation, even if you're thinking speculative for the long term, because you believe in the stupidity that they're producing, whatever it is that they're doing. Because everyone has, like, the best blah 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 coin, and it's going to do all these great things. You know how that goes. And here we are pushing lows. So obviously, no one believes in their idea. I can understand looking for cheap prices, but you want to find things that have good fundamentals and a good business model, all those kind of things. You usually can find that with stocks. I would not bet on these coins. One thing you have to realize with these coins, besides all the regulation and all the regulatory stuff that they constantly have to face, or that's on the horizon, these things are highly speculative assets. And as long as we are in a rising rate market, or rates are where they are, these things are going to suffer, because there's no new money coming into the market. We need cheap rates, we need new money, and then maybe you'll see bullish trends start to develop in some of these coins. Just keep in mind, and I've said this before with these altcoins, the big players, the big names from years ago are most likely not going to be the big names in the future, because everyone gets a new idea, they hype new coins, and that's usually where the superstar coins are going to come from, not these has-been coins. Please keep that in mind. I went through this, I remember back in 2017, okay? I remember the big name coins, right, the altcoins, and then when we had that 2020 situation, a lot of those garbage coins never even came close to their old highs, because new coins came along and made a spectacular story. Okay, so you always have to keep an eye for the new coins. And even right now, this is not the environment. So what do you do in this environment? You take note. If you're interested in coin investing, you take note of a new coin and you track it for a while. And perhaps you build some minor inventory. But until interest rates change, you're not going to see anything spectacular out of this market, in my opinion, because these are highly speculative assets. Okay, if you're going to deal with these, and you're looking to look for opportunities, it's like Ethereum and Bitcoin, right? Because they have more value and they can be used as other things. These coins are mostly garbage. These were made for developers to get rich, okay, not you. So anyway, that's my big rant on cake. All right, hope you found that useful. Okay, so Gray wants to see 601998. All right, it's a Chinese stock. Let's take a look. 601. Oh wait, that's not going to take that. Okay, hold on. Let's see, where can I put that in here? So if I do this and I type in 601998, all right, so it must be China. Oh, CIT1C Bank, that must be it, right? Let's take a look. So, oh man, that's a nice little move right there. And he's long from 593. And this thing's at 756. Okay, nice trade, Gray. Nice trade. So this thing's vertical. All right, it looks like an altcoin. So even for those that are not in this, you can learn something from this. Okay, let's go. This is the weekly chart. We can actually use this chart. We don't actually have to go to a daily chart. So if it's vertical like this, what you should do, or what I would suggest, I can't tell you how to trade, but what I would suggest is take something off the table. It's usually a good idea to reduce your risk, take some profit. Look where you are on the bigger picture. Okay, just look where you are. So you're basically in a resistance zone. Look how far back this goes, and look at the resistance that you're coming to. Okay, these are your resistance points that you're coming to on this thing. I mean, this bank, this Chinese bank, has been that high. Okay, which is what is that? $10.34. I mean, that looks like the peak going back a few years, going back to 2016. Okay, and you're in vertical mode right now. So in this situation, this zone that you're entering, that's probably a good idea to reduce risk or take profit, right? Take something off the table and then let some ride and see how far it goes, okay? Perhaps you can use a trailing stop on a portion of your position to see how far it wants to go vertical. I mean, if it wants to go vertical, let it pay you. You're in from a decent price. But take something off the table to reduce your risk, right? Because you're not in from the best price, you're in from a decent price. Obviously, you bought it while it was going vertical, right? 593, that's like around here somewhere. So you bought the breakout, and this thing can easily pull back there, right? That it can easily pull back after such a vertical move. So again, reduce the position somewhat, maybe 10 or 20% of it, maybe 30%. Take something off the table while all these people are looking to take it off your hands, right? You reduce your risk. Now, as far as trailing stop on a portion of it, you know, you can use, that's where you can go back to a daily, okay? And I mean, it looks pretty much the same as the weekly chart. Go back 2 candles, like 1, 2, and here's like where you could put a trailing stop manually. All right, so that would be, you know, 680. And then if you get a new candle, for example, that looks like this, right? Then you'd move your stop to the low of this green candle here, okay? Which is what, 688. So it's hardly moving. At some point, you're going to get a candle that looks like this. It's going to be a small candle, and you're going to move your stop up like that. And eventually you're going to get stopped out. Okay. The idea of using the trailing stop is to let the market pay you more as long as it wants to pay you. It may do something more ridiculous than this. And you may say, well, you know, at some point maybe you've reduced your position by 30%. Maybe you reduce your position by another 50% if it goes vertical for a few more points. You know, you just want to reduce your position as this thing goes higher and higher, in my opinion. That's how I would trade something like that. Okay. Anyway, thank you for bringing that up. I hope you found that useful. All right. And again, thanks for stopping in from Shanghai. All right. Let me see what else we got here. Other questions. Hey, Nuhu from Nigeria. How are you? All right. Good to see you. I remember you. Okay. I'm your only source of economic calendar. All right. Well, you know, TradingView has one. You can go to TradingView. They have it's free over there. You could take a look at that one. There's economic calendars everywhere. You know, that's all you need. But don't worry, even if you can't see the economic calendar, I don't know, just do a Google search for like non-farm payrolls and FOMC meetings. Those are really the only 2 things you need to know anyway. Okay, so let's go back. All right. I'm just going back to the comments here. We are all still here, and this is juicy info. Okay, cool. I'm glad you think so. Okay, hey, Han, how are you? Dollar break somewhere. Yeah, we talked about that. Okay, can you check your, oh, okay, oh, cool, Stian. Yeah, sorry, I've been absent for a couple of days there. Litecoin, 87 on 5/6. Okay, that was what, 2 days ago? Wait, let's go back to that Litecoin chart real quick. Okay, hold on. This is the robot. Hold on, let's see. Litecoin is at where? 76.87, right? And the trade scanner called Litecoin on 5/6. Thank you for mentioning that. Where is he? Stian and Raman. Thank you. On 5/6, which was what, Saturday? I called it short at $87. Okay. We are now at $76. So again, that's what I'm saying. The trade scanner calls good trades. They're not all good, right? It's not 100% win rate, but it's following a general trend. And that's why I put that thing together. It's following general criteria that I follow for my own trades. All right. It's just a little more strict in certain areas because it's a robot. Okay. So anyway, cool. That's cool to know. If you're missing out on that, send me a message. All right. There's some good information in there. You guys, any of you guys take that position? Okay. PP. All right. I'm not going to look at PP. I know. I know you get wise guys. I know it's a coin. But I'll take a look at Netflix. Because, I just refuse to play that PP game. All right, so here's Netflix. Now, here's what you have to understand about something like Netflix. Let's go to the weekly chart. So Netflix is a market stock. In fact, Netflix is one of the FANG stocks, which is one of the top NASDAQ 100 stocks. So whatever the NASDAQ is doing, or whatever these stocks are doing, generally, you will see it reflected in the NASDAQ, right? So Netflix, look at this. So as we know, we looked at the NASDAQ earlier. The NASDAQ's sitting on its highs. It looks like it's going to break out, right? Look at Netflix. So you have a bullish consolidation. This is a weekly chart. You can clearly draw a triangle on that, okay? So that's a bullish consolidation. It's a higher low consolidation. Now on top of that, all right, you have that consolidation. You have a higher low right here. It's taken out the previous week's high at 331. What's the previous week's high? 331.25. Right now we're at 331.37. So basically, you just take that out. That's a buy signal on the weekly chart. Okay. So let's go to the daily chart. And that's a long signal. We have an outside bar today. So maybe there's some news on Netflix. I don't know. But just keep in mind, Netflix reflects the general market. Okay. So the general market, if the NASDAQ starts pushing through highs and you see 13.3, 13.350, 13.400, 13.450, right? Then this thing is likely to continue higher because that's what it's poised to do. And it's coming off of a higher low. If you're interested in taking a swing trade on something like Netflix, there are two places where you can put your stop. Okay, now we talked about the ATR. You can use the ATR technique that I've showed you, or you can use the chart levels themselves. I like to use the chart levels because the chart levels obviously are going to be a little bit more meaningful than the ATR. The ATR is a statistical number where the chart levels are actually based on real price action. Okay, so that's why they, in my opinion, the actual levels carry more value, but they require a little bit more work. You have to understand what you're looking at. The ATR is like the easy way to go about it. But all right, so let's, ATR aside, let's talk about how you'd set up this swing trade, right? So the long would be now, okay, at let's say, what's the price right now? 331.15. So you can say, all right, let's say 331.15. Okay, that would be the entry because you're basically pushing it right now. You don't need to use a limit order or a stop order to enter. If you want to use a stop order, you can use 331.25 or 331.50 if you want to give it a little room, okay, and stop into the trade. Now, as far as stop loss, okay, this area right here, the bottom of the candle, that's going to be a little tight, because of the way this thing moves. So although you can argue that there is a swing low there, you have to decide, like, do you want to use the tighter one, which you can, but I hesitate because I know what this thing can do, and I would suggest using the wide stop. Okay, the wide stop is 332.60. No, I'm sorry. No, the wide stop is lower than that, 295. You could round that to like 298 or something, just below 300. 300 is going to be a round number. It can have an effect on this thing. It's likely to hold 300 if there's any retest of it, but that's a decent place to measure your risk as far as a swing trade goes. But if you're like, man, that's way too wide, right? Because I mean, this thing is at 330. You're looking at 30 points of risk, or 35, 40 points of risk. If that's too much for you, you can either reduce your position size, okay, or you can use the tighter stop, which would be this area right here, which is what, 310 area, something like that. You can use that if you want, but your chances of getting stopped out are going to be a little higher, okay? So depends on which stop you use. That's going to determine where your take profit should go, okay? You should be at 1.5 to 1 ratio to start off. That's what I would say about that, okay, without having to draw all that in the chart. Does that make sense? But that's a good looking chart, and it looks like it's poised to go higher. You're going to need the stock market to agree with you, okay? Cake into the toilet where it belongs. Yes, Mr. Plow, that's right. Into the toilet where it belongs. He's quoting an old comment of mine. Okay, gold. Vanja wants to see gold. Let's take a look at gold. What is going on with gold? So gold is tricky, right? In fact, I saw a video, right? I saw, there's a lot of propaganda about gold right now. Okay, let me just see here. Hey, I'm just looking at TradingView. Gal, okay, I can take a look at that before, while I get through gold here. I saw a video. I just have to tell you guys this. I saw a video about gold, and when gold pushes highs, you realize. Let's go to the weekly chart on gold. You realize gold has pushed its multi-year high. Look at this. It dates all the way back to, what is this? 2020. Okay, look at this multi-year high. Now it's funny because when gold behaves this way, right? This is where all the propaganda frauds come out. I saw a video just the other day. Now's the time to buy gold with the U.S. inflation out of control. Gold is going to be at 5,000 by 6 months. Nonsense. Please don't get sucked into the propaganda. Please do not get sucked into the propaganda. I was arguing with someone. I was like, why do these clowns come out now? Well, because gold's going to go higher. I'm like, no, Captain Obvious, it's not. Okay. I mean, it can go higher. I'm open to the idea, and we can say, well, fundamentally, inflation, blah, 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 all this other nonsense, right? Sure, you have that argument, but look at the location. That's all I can say. I look at markets in terms of probabilities, not nonsense and propaganda that people throw at you all day. That's not how I look at markets, okay? So the probability that gold is going to break out here, while I understand we have some problems in this country and it's very possible that gold can break out. I'm not saying that it's not possible. I'm open to the idea. But at the same time, I'm also open to the idea that it fails here because this is a high probability area for selling activity. You can clearly see that on this chart if you bother to take the time to look at a weekly chart instead of listening to the propaganda. So I would be actually looking to go short gold. All right, but how can you short gold? I'm open to the idea. Look at the price action. Okay, we're in a location where selling activity is highly likely. We have these pin bars developing up in here. Okay, all we need is some dollar bullish news, and you will see gold back at the low 19s or high 18s. Okay, 1950, 19 even, 18, and working its way back into the midpoint of the range. I would not be surprised to see gold work its way back there. That, in my opinion, has a greater probability. Now, I could be wrong. You know, maybe gold gets overwhelmed. I saw some nonsense. Central banks are buying all the gold, blah, 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 right? And I'm like, they come out, the central banks were probably buying it here if they were buying it. They're not likely buying it here because they know better. Okay, so yeah, so don't get sucked into that. Now, shorting gold, of course, is highly aggressive, and you really have to understand what can go wrong with something like that, because you know this thing can break out. But if I were to short gold, I'd be looking for quick bites. You know, I wouldn't be looking to hold it all the way to the midpoint of the range. That would be a little unreasonable. Okay, but 30, 40 points, nothing wrong with that. So that's what I think about gold. I definitely don't like it long here. If I was long gold, I would be getting out of it. Okay, I would be reducing the risk. That's what I would do at these levels, because that is what the chart says to do at these levels. Okay, I don't get mixed up with opinions or fundamental nonsense and whatever. I go by the price action. If gold wants to break out, it breaks out, and then I readjust. But I don't go into this with an opinion. A lot of people, that's where they make mistakes with gold. They have an opinion and they don't pay attention to the price action, and they get caught on the wrong side. Okay, so I hope that makes sense with gold. I know I can't have an opinion, but for the middle long term, something will happen. Okay, so but here we go. So you know you want to go with that. Okay, like I said, it's possible that gold can break out. It's very possible. But I don't go by all this propaganda nonsense, okay? I go by the levels and the probabilities. And like I said, I'd be a proponent of shorting gold for a small bite, okay? Again, I have no opinions. I have no long-term opinions. I just go by the price structures, the levels, and what the charts tell me to do, and I adjust risk. And if I'm wrong, I readjust. That's all I do. I don't have opinions, okay? But the charts aren't perfect. Sometimes there's some noise that can be confusing in there, and it's possible to get caught on the wrong side. Okay, ADA, sure. Cardano, I can take a look at that. Let me just see what I have going on here on TradingView. What's your take on GAL? Okay. Hey, from Croatia, good to see you. Okay, Dow theory, all factors. Okay, actually, that's not Dow theory. Dow theory is something else. What you're referring to is efficient markets hypothesis, where all known factors in the world are priced in, or price is a discounting mechanism. That's efficient markets. Okay, Dow theory is where you're using like the transports and all these other things to basically, you're looking like an aggregate view of the market. And if the transports are a certain way and the industrials are a certain way, right, and then they all kind of move together. Dow theory is more like waves, like wave counts. That's more like that. So make sure you know, don't confuse the two. Okay, what you're talking about is efficient markets. Okay, so GAL. I know you've asked about GAL before, so let me do it. GAL, GAL USDT. Okay, this is GAL. Okay, look at this. Now, I'm not surprised to see this, right? We see Bitcoin pulling back, which is the parent coin, right? We see all the market, all the coins are pulling back, obviously, with Bitcoin. And, like I said, my trade scanner called Litecoin. What a beautiful short that was. Too bad I don't trade Litecoin. But all these coins are reacting. which makes sense. Like I always tell people, look at Bitcoin first and then compare your coin. These coins have been acting relatively weak for quite some time. Okay. And in fact, there were a lot of warning signs and red flags with like coins like Matic and all those other ones. The trade scanner was calling them short before Bitcoin pulled back. And I was telling people, be careful, because it's showing a sign of relative weakness for the altcoin. But I wouldn't be in a hurry to short the altcoin if Bitcoin is still in a bullish trend. All right, so now these altcoins, this coin right here, you're sitting on a support, right? At what is this, $1.33? You can basically round that to $1.25. This is the weekly chart, by the way, that we're looking at here. Here's the thing, though. There's nothing bullish about this. You have a failed high or lower high area, right? That's clear at $2.20. So that's your resistance, and you're sitting at support. Now, you may want to argue and say, well, there's a higher low here. Possibly you had a higher low a couple of months ago, but we're testing that low again after a lower high, and Bitcoin is starting to get weak. This coin has been weak all along, okay? So I suspect that low is going to break, okay? And possibly you may see a test of like $1, something like that over the coming weeks, okay? I don't know what you're thinking with this one, but I don't see any reason to buy this, right? I don't see any reason to also shorting into a support is also a bad idea. So I would leave this coin alone, all right? I would leave it alone until it shows some kind of change, right? And the structural change that you want to see in a situation like this, for one, you want to see if it holds the support, which it may do. It may or may not do, okay? It has to prove that to you. You don't sit there and tell it what to do. It tells you what to do, right? It needs to hold that support. It needs to develop a new resistance level, perhaps in this area here, right? As like an old support, new resistance. It needs to hold your support again and then break the resistance, okay? We need to see resistance breaks in these things to start saying, okay, I'm starting to see a bullish trend, right? We don't have that at all. Like back here, it had some resistance, some minor resistance breaks. And if you were putting on swing trades in this area, of course, we can say this after the fact, you may have been able to make something out of that. But long term, I don't know. These things are a bad idea, right? A lot of these coins are just worthless anyway. They don't do anything. They provide very, very little value. They're just grand ideas. If you're going to invest in this space for the long term, I would suggest Bitcoin, Ethereum, Litecoin, one of the main top 10 capitalized coins. Oh, thank you, Nasir. Thank you so much. I appreciate that. No one gives me coins anymore. Thank you. Okay, thank you very much. I appreciate that. Okay, so that was Gal. All right. Oh, you're the guy that wanted to see Gal. Okay, cool. I appreciate that. Okay, so let me see how we're doing here. Let me go back to just YouTube. Let me see what I have here. You generally answered when talking about altcoins, okay? And about the meme coin Pepe, and it's if Bitcoin goes on, this coin will hype some more and get more legs. Always fun to throw a little bit in. Well, if you're playing a meme coin, right? If you're playing Pepe, all right, you guys insist. I'll take a look at Pepe coin. I mean, oh, okay. I can see why you guys are all excited about this. This is just a joke. I mean, come on, you can't be serious about this, right? That's like it's a total gamble. You might as well be playing a slot machine, okay? No more Pepe coin. Stop asking me about Pepe coin. All right, I'm joking with you, but still, I'm not going to spend any time on that. Okay, so is this a coin? What is this? All right, hold on a second. Let me just go back here. Thank you for looking at Netflix. I understand Pepe. Okay. Oh yeah, don't just understand what you're dealing with there. Are you telling me, wait, what tells me the silver Bitcoin chart? I see silver breaking. Okay, again, okay, all right, so you know what, before let's talk about silver. I don't know what this is called. I'm not familiar with this coin. I don't like that chart anyway. But you're saying BTC against silver? There's such a thing. Let me see, because I don't look at that. If there is there a silver? Let me take a look. I don't see anything against silver here. But I could take a look at a silver chart. Okay, which is XAGUSD. And here's the thing. Look, how much is this thing now? $25? Okay. So look, silver is just following gold. Don't get sucked into the propaganda, please. All right. This thing is just as bad as gold when it comes to propaganda. I feel you for sure, but if I'm not correct, Dow Theory has 5 main areas. I was making reference to the market. Okay. Okay, cool, no problem. Yeah, I mean, it sounds to me like you were referring to the efficient markets. I I was not aware that Dow theory covered that, but maybe they've made some new parts to it or that I'm not familiar with, or maybe I just forgot. Okay, but anyway, thank you for pointing that out. I appreciate that. Okay, gold, Bitcoin. Okay, gold, Bitcoin. Let's see, gold, Bitcoin, gold. Okay, Bitcoin against gold. Oh, so is there a silver one in here somewhere? Let's see. XAU, I see XAU. I don't see any XAG or any silver. Is there some silver in here somewhere? Let's see. I don't see anything. I'm just looking. I don't see anything. All right, we could take a look at gold Bitcoin if you want. Gold versus Bitcoin. I mean, so what's happening with gold versus Bitcoin? You know, Bitcoin is going higher than gold, right? If Bitcoin against gold, Bitcoin gold versus Bitcoin, that's a coin. I don't think that's the correct thing here. I don't know if that's correct. Type silver Bitcoin. All right, I'm not getting it. Silver Bitcoin. Let's see. Silver Bitcoin. Okay. All right, here's silver Bitcoin. So again, look, all right, here's the actual chart. Silver against Bitcoin. So if Bitcoin moves faster, higher, and faster than Bitcoin, this chart will go higher, right? And if the opposite, if Bitcoin moves higher at a higher rate, at a faster rate, higher than silver, this chart will go lower. But again, you're dealing with silver highs and gold highs. Those markets are likely to pull back. Okay, so I would not be getting involved in these, especially. Hold on a second. All right, so look at the parent metal. This is silver. Silver is going to follow gold. I don't care what you say. Silver is going to follow gold. If gold is at a major high, silver is going to be at a major high. If gold pulls back, silver is likely to pull back. So I would not have any opinions. Don't get mixed up with that stuff, man. You're going to get into trouble. I'm telling you. So I would not be buying silver here. I would not be going long silver here. You know, if anything, for short-term aggressive type trades, I'd be looking to short. Just like gold, I'd be considering a short in gold and silver. But again, for small bites, nothing major. Okay. And if I'm wrong, I'd be getting out quickly on those shorts because these things can break out. I do respect the other side. I'm just, you know, I'm also looking at the probabilities of the levels. Does that make sense? Okay, you guys. All right, so I hope that answers your questions. Look, if I missed your question, I apologize. I try to answer as many questions as possible. All right, so you guys, you know that I stream every Monday. If I missed your question, come back, ask me next Monday, and I'll be happy to answer. You know where to find me. You can send me an email, all right, and all that stuff, Market Markets. Also, if you can, please press the like button and please press the subscribe button, whether it's on YouTube or it's on the TradingView channel. And so you guys should be pretty much all set, okay? So we're watching these lows for a possible reversal, and we'll see what comes of that. Otherwise, you guys, thank you again. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.